Good evening. Just wanted to quickly go over Friday's price action and what went down and the correlation between the different markets and how we could have anticipated and did anticipate some of what went down. We'll start off with DXY. So DXY, pretty much will go to the 4 hour, blow it up a bit. So we had this bit of a market maker sell model. This is CPI right here. Prior to CPI, we had dropped down into a discount of the market maker model. Had a small consolidation Monday through Wednesday above the weekly open. And then CPI, which is this candle right here, just displaced from the weekly open right down towards the previous month low. So it was clear that we're drawing towards that, and DXY is in a bit of a hurry to get there. What was really interesting about this level as well is that it is almost 7 pipettes off of 104 even. So a really strong draw on liquidity. If we drop down to the 1 hour, so the CPI drop in here, when CPI did drop, we retraced to just above the 50% of this range. That's obviously good enough, seeing as we are nearing our draw. So you're anticipating institutional order flow intra-drill, OFED, as we're nearing the draw of a market maker model, and that's exactly what we'll see here. On the 1 hour, you can see we have this fair value gap. We just dip into it and then starts rolling over again down towards the low. Is this right here? That's 104.5, like mid figure. So dipping above that is another great confluence that we're good to roll over and continue lower. And yeah, and then this is Friday right here. That's Friday's PPI number that came out. Just ran up into a fair value gap and then rolled over towards the lows. So now I'll bring up the other assets. It's got NASDAQ here, ES as well. So the large drop, that's CPI. CPI just rallies up, dumped down quite hard, and ES did the same. However, what was interesting to note is that when NASDAQ dropped down all the way below this previous Friday low, whereas the same low on ES is all the way down here. So ES was a lot stronger. And actually, on the CPI drop, we barely came below the previous day low, which was here, whereas NASDAQ exceeded it by a fair bit. That's the same low on NASDAQ right there. So NASDAQ was a lot weaker, and that was one of the clues that we might see a bit of a pause in the sell-off. It's just the strength, the relative strength that we have in ES compared to the NASDAQ. So I was watching that prior to the morning open. I was wanting to see how far down we would drop and how far the manipulation would go. But I knew that we'd want to retrace at least a small portion of this move. So as you can see on the PPI number, it did spike down below the 50% and then just rallied from there. So when anticipating a Judas, usually it will either occur at 9:30, or if there's a high or medium impact folder at 8:30, then you might see the manipulation at 8:30 instead of 9:30, and then 9:30 distribute. That's what happened on this day, seeing as PPI is a red folder. I'll just chuck that up on the screen real quick, the exact news for that day. Yeah, so yeah, 8:30 PPI, 10 a.m. there's also a red folder, so a nice driver to continue distributing us higher. So yeah, we had a nice sell-off on NASDAQ. I'll focus on NASDAQ for now. ES, the only thing I really want to show was how we have this really strong, relative, has got a lot of relative strength as compared to NASDAQ. So you could see that as SMT, at least for a retracement if not a full-on reversal back to the highs. Yeah, so we have the 8:30 manipulation, sorry. We can confirm that with SMT as well. Obviously, ES did a very similar thing. We do have the higher time frame SMT. But another thing I was watching that confirmed the SMT was YM and RTY. So these are very closely correlated usually, similar to ES and YM. And what I was watching on this is how, just make my charts look nice-ish. So prior to the 8:30 driver release, we have this market structure shift here, and then that confirms this as a intermediate term low. Then when the 8:30 news release happens, she dumps down, takes all this internal range liquidity through here, and then rallies back up with another shift up here. At the same time, RTY came down, but actually didn't take out the equivalent low, which is this low down here. So we have SMT right here as well. So SMT between RTY and YM. And that was a confirmation that this was indeed the manipulation, and we're likely to see higher prices. As far as the strength of the move that we're going to see would be, there were a couple of ways we could have noticed this. One of them is the willingness for us to come into the manipulation wick, which you can see on both RTY and on the YM. On the 15 minutes, we don't even manage to come to the 0.25% of this wick. So we left the whole wick open and then rallied from it. So that was one sign. If we look back on ES and NQ, you can see a very similar story. We just wicked down and we just refused to go any lower from there, just continue to move higher. Another thing you can watch for, I'll jump onto ES now. So this ES is the regular trading hour gap. So I have this on regular trading on electronic at the moment. I'll switch to regular. And you want to see the willingness for us to fill the regular trading hour gap within the first half hour during the opening range essentially. So on ES we have 9:30 open right here, and then up here is 10. So within this range from the 10 down to 9:30, so this time period I guess, you want to see the willingness of us to fill the regular trading hour gap. We did dip down at 9:30 perfectly to the 50% point, but then we just rallied away and didn't show any willingness to come low. So when you see that, that's a sign that we're likely to want to continue drawing high. On top of that, after such a huge drop like this, there's going to be a lot of buy side liquidity left behind, so of people trailing the stop loss. I'll jump up to higher time frame once more. So whoever's short up here, they're going to be trailing their stops down, and there isn't really any clean area to leave your stop. The books tell you to leave it above a short-term high or anything like that, whereas through this drop, there is not really any area other than here. Maybe that would be the first area that any retail trader would kind of think might be a safe area to put their stop loss. So that's just a bit of an obvious draw really after a large drop like that. And then we have the exact same thing on NASDAQ, where we just have a clean drop, only one up close candle, and then consolidation at a deep discount of this range. That's what this red line is here. So yeah, at a discount of the range, consolidating, and then this is like the first kind of premium area of buy size that we could reach for trailed stops. So that was another confluence of why we were likely to draw higher. So we have the manipulation at 8:30, and then looking for distribution up, 9:30 continuation, and looking for that 10 a.m. news driver to just help push us in the direction of whatever the distribution is, which was up. Let's get rid of this, clean up the charts a little bit. Don't need this anymore because we know what the news is. So the next thing I want to go over is 9:30 open itself, really. So we'll drop down to the 5 minutes. It's the 5 minutes on NASDAQ. So we can see we drop down into a discount, taking out all the sell side, and then running back up and into this low resistance from the overnight session, and then making a nice high up here as we drop back down. What I was watching at the open is how we were respecting this order block. It's a great way at the open to kind of get a feel for where the market might be going towards. Usually if you have a 15-minute order block, it works really nicely. But if you see like a lot of digs into a nice clean order block such as this one, as we see here, lots of the time that you can use that as a way to frame risk and trust it as an order block to send you higher. So one thing you could have done in this situation would have been just simply put on a position like that. I didn't, because I wanted to see if we wanted to drop down into this wick, which was a likelihood. But as I mentioned earlier, like the fact that we couldn't do that just really gave a bit of weight behind how strong this move would be back to the upside. The areas of interest prior to the open that I was looking at were this fair value gap here. So if you want to see us have a continuation after a bearish day, you want to see us respect the PD arrays in the lower 25% of the range, of the previous day range. So this is really the only PD array, that and the order block, in the lower portion of the range. And other than that, we have a fairly low resistance liquidity all the way up here, and then premium arrays at the top. So if we were to see a continuation lower, you wouldn't really want it to come up past here. And the fact that there wasn't much of many areas for trail liquidity through here, especially not for a nice premium, we were likely to drop there. And this was kind of the line in the sand. If we disrespected this, we were likely to see higher prices. So as we rallied up towards it, bring up ES on the side again so we can compare them. One second. Yeah, so I was watching this area. I wanted to see if we did have a bounce there. Initially, we do respect the midpoint of it, but at that same time, upon this candle closure, so I've got this little note here for, on this candle closure, ES actually closed above that order block, very bullishly, with no imbalances up here other than all the way up here. So ES was looking really strong, clearly wanted to reach high prices, and that was one warning why this would likely not hold. The other thing I was watching, if we look at DXY, it's one of my favorite PD arrays to look for, is the midpoint of a 15-minute wick, so the wick CE. They tend to be a really strong PD arrays, give you nice strong rejections. We do get a rejection initially at 9:15, and then we just start climbing higher into the open, kind of like a pre-open 9:30 Judas, and then we start to dump back down. This is the 10 a.m. candle here, which is the news candle. That candle drops down and closes below the midpoint of the wick. Even just coming back down here, that's already enough to see us as being very, a lot of risk on. And then the close just really locked it in that we were in fact drawing lower towards the previous month low. So yeah, that's that candle right here, this green candle. So although it did respect this, at the same time we have ES disrespecting its relative order block, and DXY was closing below the wick CE. So There's plenty of confidence while we like to see it higher prices. So how do we get into a move like that? If we believe that price is going to move higher from here, how do we know how far down it's going to go? And how do we jump on board and catch the next leg up? Obviously, targeting 50% is a really nice first target, but how do we actually get on board that? So this is what I was looking at. I have a model that I use sometimes where it basically takes advantage of the first counter trend closure of a candle after a strong move in one direction. Usually, around the open, we will have a really strong move, and then you'll get like the first kind of down close against the trend. A lot of the time, you'll find retail will want, like the average retail trader, people tend to be counter trend by nature, and they'll be trying to catch the top on the way down. So as soon as you get the first kind of down closes, especially on 15 minutes, but also the 5, you can look for that as once that's printed, as a way to get in. So if we drop down to the 1 minute, so we can see in more detail. This is just that 15 minutes SIBI, which gets inverted. So yeah, so right here, this is the 10 a.m. candle right here. I'll put a dot on it so you can see. So that's the 10 a.m. news, which rallies up. We then engineer a nice low after the news. So this is kind of the post-news liquidity pool. And then we have a high resistance run higher before breaking down below that low. What was interesting about this is how we broke down. We broke down quite lethargically, giving plenty of time for anyone trying to catch the top to get short. And leaving behind really smooth highs the whole way. So that was really interesting. Another thing was the fact that once we got down to this news low, we engineer another short-term low, and then we dump through it. So when we dump through it as well was on a new 5-minute candle. So this is 10:20 right here, a new 5-minute candle opening. We open, we drift low, and then have a nice sharp dig below that sell side pull into this fair value gap. We did fall just short of this fair value gap, which kind of threw me off. But if we look over to the right real quick, that is actually where we ended up at the end of the day. But that is beside the point. So you could either jump in on a turtle soup here when your stop will be below the swing low / order block. If you had the conviction in the trade, which I'm working on getting conviction on taking soups kind of like this, especially with this particular model, you'd be able to jump in like that. But if you needed to see a bit more price action to confirm what you're seeing, you'd wait for the rejection. We have a beautiful market structure shift right here. So I'll just leave it like that. A nice market structure shift. We have this down close candle that took the sell side. That's your order block. So we can use the order block, and the fact that we have all these smooth highs, and this is the first kind of proper drop down after a really large rally from the open. Whoever's short right now, they're trap short. They are hoping and praying that price has a quick dump down here, and then so that they can get out of their position or profit from it. But that is usually not the case. So the fact that we've left all this down, had this drop lower, and then sharply rejected, you don't want this to see this retrace very low. So you ideally want to see this stay open, which it does really nicely. And then you'll just, so you can jump in here, put your stop at the low just to be safe, and observe price action. Right here we have 10:30 is this candle here. 10:30 soups this short-term low, and then just rips straight up. So that's a really nice trade. I didn't participate in it, but the entries would have been really nice. Would be obviously this order block with your stop below the swing low just to be sure. But if it came down there, you'd probably want to think about your position again. And then if you were lucky enough to catch the soup, you'd be looking at something like that. Obviously targeting, you could easily target the buy side. If we look over to the left, I'll just turn to regular trading hours so we can see it a bit better. So we've got all these buy side pulls, nice and smooth highs as well all the way through here. So you can be targeting those. You can be targeting the midpoint, and some other really nice targets would be where are we? So this is 20,600 on this level here. Usually after a big drop, we will want to run up to like these big figure levels, and when we do, we often will run at least 20 handles past. So that could be a really nice target of 20,620. So that'd be likely, yeah, a good area to be taking some off, and obviously targeting the midpoint of the range is also a very nice target, which would have been perfect in this scenario. The next nice opportunity of the day, after we consolidated up here, we dropped down during lunch to take some of the AM session sell side. So I was quite interested in this because we have this balanced range in here. We have sell side, buy side, nicely painted in, and then just placement out of it. So this range right here is completely balanced. In a balanced price range, you want the midpoint of the range should act like a brick wall. As you can see here, that did in fact act like a brick wall. And also, obviously this is quite a deep discount of this range. We're probably over 75% into the range right here. So if you were to just trade on a higher time frame and use external as your stop loss, that's still an incredible risk to reward just from here to external. Probably the best opportunity of the day that I did see and was actually in YM. So if we look back at YM, still on regular, I'll go to electronic. So this is electronic trading hours. I'll just turn on this right here. So this pink box, this is the new day opening gap. And what I was watching is one, obviously we failed to come into this wick showing strength. We have a market structure shift up here. And this is 9:30 right here, this big down close candle. So 9:30, it dumps down, engineers a pull just short of the new day opening gap, and also roughly just approximately here is the midnight open. So we engineer a pull. We've also got this fair value gap right here and an untapped order block as well. So untapped order block. Let's move midnight to where I want it. And a beautiful fair value gap in here as well. So we rally away, have a shift in market structure. This hits external range up here. We have external range to internal range, internal to external. So we drop down, make relative equal lows here, taking out the 9:30 low, and then we start climbing back into the range. You notice on the drop low, we left smooth highs, efficiently balanced the range the whole way, except for this low area. But then we come back up and we balance that in. So when we balance a range so efficiently, it prepares us for a low resistance delivery back through that range. High resistance down, low resistance up. So that was setting up nicely for this run higher. And what made this trade so good is we have the 10 o'clock news. So that's the 10 a.m. candle right here. I'll put a small dot on it again real quick. So we engineer relative equal lows. We entice longs, climb high into the range at a short-term premium from this high to this low. We consolidate and have a news driver at a short-term premium. So this makes this this pull that we engineered extra strong when we have that. A news driver and a premium after enticing, and then drop back into it with a nice sharp drop. That's a model in itself. And then if we look at RTY, at the same time as we were making lower lows in YM, just change the color, we were making higher lows in RTY. So we have higher lows here. If I can line that up. So yeah, so then after the news driver, we dropped down really aggressively into sell side with a very sharp rejection, hitting the N-Dog, these relative equal lows, filling the fair value gap, hitting this order block, midnight open, and down in this area down here, this is all balanced. We have a lot of buy side and sell side delivery in this entire range. So all this there's no need for us to come any lower. So that was a really nice way that we could frame risk. Could go buy on the turtle soup of the low. Stop can go as close as that. And obviously, just target infinity and beyond as you do. But what gave me confirmation for this trade was, once again, this was at 10 a.m. That's when DXY at 10 a.m. was beginning to really drop lower and aggressively move towards its previous month low. So we had that on our side. And the other thing was RTY is super closely correlated. So I just realized this was ES and not RTY. One moment. So yeah, lower low here. Same time we have higher lows here. So right here at 10.04, we dip down into the sell side and take out the low. At 10.04 on RTY, we are already taking out external range. We've already rallied really hard and looking really strong, accelerating towards buy side. So if at the moment that YM is here, RTY is actually all the way up here. Just want to use the highlight again. And the closely correlated assets, we can use the Six Sister approach to anticipate YM to catch up with RTY. So that was a really nice buy. After that, we also have a nice drop into fair value gap, order block, volume imbalance, even a reclaimed order block over here. And she just delivers with a nice low resistance liquidity run into buy side. So that was probably the trade of the day. I didn't trade it. I did jump in here. So I jumped in for a long right here. I caught the turtle soup. Didn't quite catch it below, but I caught it about there. But then once we got into this range and we were failing to displace, I actually closed it in here. I was watching us drop down here and thinking it could be a re-entry, but I didn't like it. The main reason was actually, if we go to regular trading hours, is the fact we hadn't taken any regular trading hours sell side liquidity, and we were so close to it. I was expecting that we may just want to dump down into it, which we didn't do. And that's something that I've been backtesting this weekend to try and work on, is just going back through the charts just like this on the regular trading hours and seeing how we actually do treat these gaps, the regular trading hour gaps and the regular trading hour liquidity, because I was thrown off twice this week by anticipating us to reach for certain pools, but then we just ripped the other way. And then I'd be, let's say up here on a certain day, I might be thinking, oh, we need to go back down there, when in actual facts we have other ideas. So that's probably the biggest lesson for me from this week, of something I can work on, because 9:30 is my best time of the day to trade, really. And this is a significant part of 9:30, is understanding how we treat the regular trading hours liquidity. I think something I have noticed is that when we have a 8:30 news driver and it does do the damage, I guess, and take out the sell side in this case, that tends to be good enough. And yeah, and 930 might not need to do that. We had that again on NASDAQ on Thursday. That was the other day that kind of threw me off a little bit. Is this, 930 just in here. 930 pretty much it just sells off from this fair value gap and just rolls over. If we look at these highs right here, these highs, I'll mark them out and then I will go to regular trading hours. Just remember those. They are relatively equal with this PM high right here. So that's the PM high. Those are the highs during the 850 macro. And when I saw that form and that they were relatively equal like that, I really wanted to see a start up into them and then sell off. And so I was caught trying to go long through here and ultimately missed a 600 point sell off. So that's probably the most important lesson from this week is just understanding how we do treat these gaps and what is enough. Like just coming above this short-term high here, is that enough to send us lower? Or the fact that 830 already raided all this buy side and did the manipulation, and that's enough to send us selling off. So yeah, it's the biggest lesson for this week. Looking forward to the next week and seeing what we do. Not convinced either way that we're going to go, but I do believe we're likely to come down at least once more below here. I'm really eyeing up for the downside target. If we do continue to the downside, I want to see us take out this Wednesday low. But other than that, like I'm still bullish high time frame. I think max pain is where we're going to go, and max pain at all-time highs is always more up. So looking for that. One other thing that's really interesting is how this was the previous all-time high and just how we treat that as a nice area to engineer and take liquidity. So on this day we made relative equal lows at it, and then the next day at 1800 we soup it and then move away. News engineers another low at this old all-time high. We come down and make more relative equal lows there, and then once again we use 830 to turtle soup it and run up to a premium. So you can just imagine people looking at the higher time frame have been taught that old high becomes resistance becomes support. They see all these lows in it and they'll be buying here and putting their stop loss right below. They see all these bounces on it, they'll be thinking, oh cool, it's a nice place to put a stop. Then we get the manipulation through it, and then so that's another reason why this was such a strong area to reverse from and why we could have trusted this move up, is because there would have been a large amount of sell side liquidity at a discount of the range, barely, but it is a discount that we did take, and yeah, that's enough for us to reach for at least a short-term premium of internal range liquidity, so up here above this line. So that's what we're looking for next time, is just to try and anticipate, like see in advance where we're likely to draw towards, especially after a drop like this. We're likely to want to reach for some sort of buy side of short-term premium at least, even if we continue lower or just flat out reverse. Looking for a short-term premium is what I'm going to look for in the future. So hopefully this was insightful, more so for me than anything else. Like just talking through it helps me to better grasp what I missed, what I did see, and really dial into my process and perfecting my process and kind of getting better next time this kind of situation occurs. Also, I'm trying to get a better overall market perspective at the moment. So looking at multiple markets, multiple assets, and kind of getting my overall bias and feel for what the day might bring by looking at multiple different assets, including Forex pairs. And yeah, it's kind of my goal for this week going forward. So yeah, enjoy the rest of your Sunday. Peace.